Hey there, this is the Market Doll Queen, and today is July 19th, Monday, and it is a bloody Monday in the market. And today I wanted to make a video about playing put options. Majority of the time, you see a lot of options that are calls, and now I wanted to explain what we're doing when we play the put side. Of course, the put side is short side. You expect the price to continue to drop. And right here, for an example, I'm in my TOS, my Thinkorswim program, and I'm looking at gold, GOLD. And as you can see, it's been declining and looking like it's going to continue to decelerate. So this could be a good option for a put trade. So I go over here to the trade button, and when I play puts, I like to think of them as bear snacks. I don't really give them a long expiration date. I tend to think of them of a quick trade, okay? A bearish move is usually a quick drop, and you'll usually see a bounce off of a bearish move. All of the puts that I have alerted first thing this morning have since bounced back to the bullish side. So for the moment, I want to go ahead and show how I pick the put. So when I'm looking, I look at the share price, okay? I definitely want to see that the chart is on a decline. I like to see that my indicators are giving me signs that this is on a decline. And then I go to the trade button. And of course, I have calls on the left-hand side, and I have puts on the right-hand side. What I like to look for is pretty much a number close to the actual share price and something with a decent open interest. So right now you can see it's at 2041. I could say I like the 2050 put. So anything under 2050, and it gets higher and higher and higher in value. As you can see, there's 1100 in open interest right there. The volume is kind of small. The delta is not bad. That's 55. Bid and ask are very close. That's a decent trade. You would go ahead, you would click on there, and you would be buying over here. Yes. You would be buying your single. You're buying a put. You've got your strike over here. You could go ahead. If you didn't know this, you could change all of these settings here in your Thinkorswim. If they're not big enough to give you all the information, go ahead and drag and drop. That way you could exactly see what you've got going on, all right? Go ahead and customize it however you see fit. But that's exactly how you do it, just the opposite of calls. You'd be doing the puts. I like to see a decent open interest. I like to see the bid and ask very close. And I like the expiration to be very close. There's no point in paying for extra premium if you don't intend on holding it that long. Unless, of course, that's the only strikes that give you a good open interest. As you can see, you could go ahead and pick the 21 put. That looks very good. The 20 put, look at it. All right, it all looks lovely. You could also go to next week and you check out the same thing. You check out the open interest. And like I say, I like to see a decent open interest, whether it be on calls or put side. It doesn't matter. And I kind of like it in the 1,000 range. Honest to God, I do like that. If I wanted to see even further away, I would go to the next monthly expiration, which is always the third Friday of every month. And next month just happens to be on August 20th. And you could see for puts, we've got some decent stuff right here. You can go ahead and play that. That's beautiful. The spread is very tight, 59 to 61. Go ahead and play the 20 put. Look at the open interest, 4,200. It's just beautiful. All right. It's a great way to play it. But remember, bearish plays tend to happen quicker. Just as much as a bullish run tends to pop really hard, high, fast, and then it stops and drops. The same holds true for a bearish play. It drops hard, it drops fast, and then it bounces. Ford was alerted for a put first thing this morning, and as you can see, it was an extreme bearish play, and it played out very well. And then it bounced, and now it's back up into bullish territory, about where it opened up at. But like I said, when I alert a bearish play, I expect it to be a quick trade. Make your paper, hit it, quit it, get out. Always make sure you lock in your gains. And the way you do that is you have to sell your position. You can scale out. Say you have more than one contract. Say you got 2 contracts. Sell one, let the other one ride, and right down here where it bounced, I actually would have held it right around till here. And the reason being is that's when the TTM squeeze changes and gives me the signal that it is now in a reversal. Because all along here, this is unknown. It still looks downwards. We still got the red bars. We still got the MACD coming down. We still got volume giving up. It's right here where it changes. You've got that big bullish candle. Yeah, right there. Alerted a put, play your put, lock it in, play a call, and then ride that bitch and go all the way. Look how we've got the MACD coming up. Like I said, I've alerted many puts. I expect puts to be played quickly. Once I alert them, get in, hit it, and quit it. I can't emphasize this enough. Bullish drops tend to bounce and bounce hard. Apple, case in point. Same thing with Ford. Ford was alerted first thing after the bell. Same with Apple. I saw this bullish play playing out. So I alerted Apple right there for a 140 put. Of course, I got it expiring this week, which would be 7/23, and that played out nicely. Now, if you look at it, it does exactly what I said. When a bullish move is in play, the sucker drops hard, and then it bounces hard, and it bounces just as hard as it dropped, usually a V recovery. Play your bearish trade, play the put, and then get your call and bounce back up out of it. Always take advantage of these bullish and bearish moves. If you can see the market falling just like I can. Everyone wakes up and they see blood in the market and they go, oh, damn, what am I going to do? Well, you're going to play the other end of the trade. And that's saying that the price is going to fall. Any of these that I like. So here, let's go to another one. I alerted American Airlines for a put this morning. American Airlines was alerted for an $18 put. Same thing happened right after open, alerted for an $18 put, and you could see it went nicely down there. And then it bounced, just like I said. Play the bear moves quickly, get out of it, change your play a call, and play the opposite end of the trade. You want to go ahead and look. You go to the options chains. You're looking at that bearish move. You want to get it as close to the share price as possible. You're looking for the best open interest, the best volume. Look at that right there. So you want to play the bearish move of American Airlines. Say you expect it to drop lower than $19. I would go to 18, okay? You would go to the next lowest number. You want it to get close because the closer you are to the strike, the better reaction in the premium changing in your favor. As you can see, open interest over 5,200, volume just a banging, over 20,000 in volume for this put. Nice, cheap lotto play, tight spread, 25 cents, 26 cents. A beautiful trade right there. And go ahead and play that. Play the bounce, play the opposite trade, and play it into a call. You can play a straddle. You can play a strangle. There are many ways to play the market when it's bloody and red and making all your other holdings look like crap. There are ways to make money. And that's the name of this game. We're just trying to change a dollar into two. That's all we're trying to do. GDX alerted for a put this morning. A 33.50 put. It was a little bit later this morning, and it was right here when it hit VWAP. I liked it right around this 33.50 level, but I saw it dropping. It was just giving me the signs. Look at my MACD crossed over to the downside. I've got my TTM squeeze coming to the downside. I've got my other indicators telling me it's in deceleration mode. And anytime candles dip below VWAP, we're in a bearish move. The further it gets away from VWAP, the stronger the bearish signal. So this was alerted for a 33.50 put. And as you can see, it went well below my strike and hit 33.01. Beautiful trade. I'm going to go ahead and look at this. I gave it, of course, this week's expiration because I expected this to be nothing but a quick trade. And it was the 33.50. As you can see, the spread right at this moment is 71 to 74 cents. Open interest almost 11,000. 11,000 in volume. It has a 62 delta. That is a very strong trade right there. The entry for this alert was 60 cents. Now, if I were to go back to the chart, let me see what this alert literally hit this morning. And there we go. As you can see, like I said, expiring this week, 7/23, and the entry was 60 cents. It hit 75 cents. That's a great day trade. A great day trade. I'm telling you what. Beautiful. See it dropping on you? Play the puts. Buy the damn puts. This one here, SPY. Look at this. Now, if you're feeling so inclined, right here, the white dotted line is VWAP. What have I said? Anytime the candle crosses VWAP and this one is dropping to the bearish side. This one's got me curious, so I'd go to trade. We're in the SPY. SPY trades every couple of days. Today is the 19th. You can see as I open up this 0-day expiration, you can go ahead and scalp a SPY all day long, up and down. As you can see, open interest and volume is extreme, which means it's very liquid, very easy to buy, very easy to sell. That's what you want. You want to play this? You can go ahead and play straddle. Straddle would be the same strike and different directions. One call, one put. Strangle is two different strikes on either side of each other. Say the share price was 424, you would buy the 423 and the 425. That would be a strangle. Think of it as hands on either side of a neck, and the neck being the share price. Each side of the hands is the higher price, the lower price, that's a strangle. A straddle, think of that neck, you're sitting right on that neck, and then the price, the direction is on either side. There's many ways to play a bearish market or a market that just gives you massive up and downs. If you do play SPY, remember this is a crazy one. Make it quick. If I were to alert a SPY, I would probably at least give you a couple of days, which isn't bad. You could go ahead and, play a 420 put if you were so inclined, or a 425 call. There you go. Many different ways to play this. But remember, green is green. Lock it in when you get it. That's the only way to realize these gains. That's how you grow your account. So play the damn puts. Till next time.